Good morning, trading world. It is February 4th, 2022, just after 8 a.m., and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook is Earnings Delivered by Amazon, because they sure are delivering everything else. The question is, will it be enough? And for the time being, Amazon may have kept us from slipping off into the abyss. But the clock is ticking, and I see trouble ahead. At the end of February, maybe the beginning of March, things are going to get ugly. Amazon may have a pop now, but it should come back to earth possibly starting today. With today's job number, we could possibly drift lower towards the 443, 435 area on the SPY based on the 4-hour time frame. Keep an eye on tech as a whole using the QQQs or the ETF, which I believe is XLK, and financials. As always, those are two of the biggest sectors that usually play tug of war because of this rising rate interest environment. One actually does like the rising rates, which is financials, and one rising rates cannot be more detrimental to, which is tech. So keep an eye on those two, because they could be what either lead us lower today or the beginning of the turnaround. And even the turnaround is just back to a level not too far from where we are, where we have a lot of overhead supply. Let's get to the key levels for today. Alright, here we go with the key levels to watch for today. Starting on the resistance side, we have Jack resistance at 449 through 450. Then Queen resistance at 451 through 452. And then King resistance at 454 through 458 area. On the support side, we have the Jack support at 445 through 444 area. And Queen support at the 443 through 441 area. Then the King support all the way down at 440 through 435 area. Some things to keep in mind today, or actually the main thesis for today, is bearish closing below 446.60. The alternate thesis is bullish closing above 446.60. The current minor channel that we're in is the 453 area down to 443. So those are going to be great places to look for opportunities at the 443 area today on the reversal side. But make sure to confirm with divergence, because that is the minor channel. The major channel is 453 all the way down to 425. So make sure to confirm with divergence on your indicators. And let's get into the scenarios for today. Alright, the first scenario that we have today to look forward to is the range day structure we could look to set a decision area, a high boundary around the jack resistance area before chopping lower, then possibly another try pushing boundaries higher and then fading again. However, keep in mind that we have a jobs number coming out, and this could impact things greatly, because with that job numbers, we could wind up back down here starting and then doing a number this way for a good portion of the day before trying to lift. But it all depends on how this job number looks, because that job number could push us into quite an ugly scenario, which would change a lot of things up. So make sure to keep that in the back of your mind as things set up today. All right, the next scenario we have is the rounded reversal day type structure. We could get a continued takeoff toward the queen or king resistance area and find midday chop around those two levels before spending the same energy we use getting up to that level going down the second half of the day. Now, this is how it will look, but let me remind you again about the jobs number. We could take a vice versa stance with the jobs number, which could put us in more of a stance to look more like this with the jobs number. It could really do a number on us. There's some mumblings coming out, so it's very hard to pin it down because of the report, because we have been known to make big moves off of the jobs number. And whoever the person is that is supposed to put together these estimates, they seem to not be able to hit a broadside of a barn. So we have no idea until they release those numbers what is going to happen. So that's scenario number 2. And let's get to scenario number 3. Excuse me. All right, on the last scenario, we have a trend day up. On that trend day up, it's going to depend a lot of what happens with the jobs number, whether we open gap up or gap down. If we open gap up, it's a good chance that we have a trend up day. And usually what happens on a trend up day is that we start gap up, open with a small fade back towards yesterday's close, which is 446.60, and we find support on or before that level, and we begin the strong morning uptrend. And we get that morning uptrend leading us to midday, where we find our sideways chop area. And then the second half of the day is usually a head fake to continue the trend, and then a fade into the close. Again, with the jobs number, this could be the exact opposite. So I usually don't have to do this, but these jobs numbers are getting so crazy right now. It is just hard to see, especially with the volatility. So we could get this type of action, which could bring us to opening gap down, and we could see a somewhat relief rally after the open, which could possibly take us back up and find resistance on or before the previous close. And if we do that, we could definitely see a situation like this, where it would be the exact opposite. So these are the things to kind of prepare for. Like I said, I'm waiting to see what this job numbers hold and where it takes us, because we are seeing some explosive moves on jobs numbers and some of these reports that matter, especially inflation and jolts in jobs. So that's it as far as today's scenarios. I do look to see another rally at some point to get us back to that area of overhead supply here in the next week or so. So as always, know your risk in any position that you take, and profit will follow. Wishing you a great trading day. Have a good one.